Hi there, welcome to Grain TV. It's Tuesday, May 10th, and an update in grains, no doubt about it. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn gained 10 3/4 cents, and soybeans up 53 cents, being as high as 65 cents, the limit move on the day at one point before closing a little below that. Wheat was just a follower on the bullish enthusiasm in corn and beans, gaining only 5 cents a bushel. Before we get to the USDA crop report, let's talk about some of the other news that came out this morning. First, CONAB, Brazil's crop forecasting agency, sees a smaller soybean and corn crop down there. Not surprising, corn they pegged around 80 million metric tons, off from their previous forecast of 84.6 on dryness concerns around the second season's corn crop there. But what was a bit surprising is the fairly sizable chop they took to the soybean crop, coming in at 96.9 million metric tons versus 98.98 that they had previously. But the real news today was USDA's monthly WASDE report, and that got the market extremely excited. First, let's talk about old crop. Here, there was not really anything to get overly excited about. The numbers were pretty much in line with expectations. Corn and beans were pretty much stronger because we had stronger export numbers. Beans was actually favorable to the tune of 400 million bushels of carryout versus 426 expected and 445 last month. Corn also favorable, maybe not quite as positive as soybeans and wheat. I guess the only thing you can really say here is that USDA didn't really slash their wheat exports like perhaps some of us think they should, and they kept wheat carryout about the same at 978. But the real news on the day was soybean new crop projections. This is what got the market shooting sharply higher. The soybean carryout for new crop was pegged at 305 million bushels. That's off sharply from analyst expectations that looked for a 400 million bushel carryout. So well below where most of the analysts were pegging it to be, and certainly got this market sharply higher. In other news, corn came in better than expected, but nothing really to write home about here. We came in at 2.1 billion bushels versus 2.3 billion bushels that was approximately expected. Strong exports is the game changer here that USDA is looking for, and also increases in feed use to keep those carryouts below 2.3. But wheat, unfortunately, did see a big increase in carryout, going to 1,027 million bushels. So again, the wheat market continues to flounder from big supplies and sluggish demand. But before we get to any more detail on this, let's talk about this soybean number, because this is really a big change from what people had been trading. And how did USDA get to their 300 million bushel carryout? Well, first of all, they did it on the backs of very strong export demand expected next year. So overall, when you compare this year's old crop situation to new crop next year, they're looking for a 140 million bushel increase in exports. Certainly, we were looking for increases in exports because this year was off, and we have the expectation that South America may not be exporting as much from a smaller crop. But a 145 million bushel increase in export would be a record high after 2014's record high of 1885. The other thing that I think is somewhat problematic is they have what might be considered a fairly low estimate for yield for soybeans. They come in at 46.7 as the U.S. average soybean yield. And again, these are just projections without any sort of real hard scientific data behind it. But that would be below the last 2 years in a row. We had last year 48 bushels to the acre, and the year before that around 47. So overall, I'm not sure this is a sustainable number until we start to see more of the growing season, more indication that we're going to see a strong surge in exports. Because certainly, I'm not sure we've seen it to the tune that USDA is talking about. New crop sales are not off the chart strong. So it's a little premature maybe to pencil in that high an export number in light of what we have going on so far. It's not to say we can't get there, but I think it may be a bit premature for USDA to put that out there. But nonetheless, that's what we're trading. Let's take a look at the nearby soybean chart. This is a weekly soybean chart. We have to go back quite a ways to see prices as high as we got today. We're around 10.80 on front month July. And you can see this is basically the highest we've been since back in 2014. We're sort of in that range where we get up into $11. And quite frankly, when we get to $11, it's not that long before we get to $14. So it's going to be interesting to see, first of all, can beans clear $11 in the front month July? And I think, we've had a very sharp move higher today. We didn't close at the limit, but we certainly closed strong. And so will beans keep carrying and break through that $11 mark? That's going to be the first test. And I think for that to happen, we really need to see some confirmation of export business. Up to now, we haven't really seen it. Export sales have been a little sluggish. Certainly this time of year, we expect it to be sluggish, but we're banking on big export sales coming to the U.S. shores in light of problems in South America, in light of the Brazilian real getting stronger and making our position more competitive. So all of those factors we sort of take for granted, but now with the market as high as it is, I think the market's going to need to see some confirmation that we're going to start to do some business and move some of these bean inventories. So that's what we got for today. Certainly an up day. By all means, if you're interested in trading futures and options and hedging your crop, we at Grain Hedge can help you do that. Visit us online at grainhedge.com to learn how you can take a demo of our trading platform and see some of the services we put out to farmers. Have a great day. Silver right now is at historically low levels. Starting with the financial crisis of '08, silver prices made an epic run from $10 an ounce to $50 an ounce in just 3 years. Silver looks poised to make another run higher. Here's why. Today's headlines show wide-scale economic risk, central banks using negative interest rates to stimulate economic growth, and the continued explosion of government debt around the world. All these factors are creating a flight to safety in physical metals. On the fundamental side, high mining costs limits new silver supplies, while demand for silver continues to expand through rapid use in cell phones, plasma TVs, and batteries. All these factors suggest taking action at today's prices before silver reaches $25 an ounce. Our precious metals desk at Grain Hedge can educate you about investing in physical metals. Their goal is to put the most amount of silver and gold in your hands at the least cost. To get started, contact Rodney at grainhedge.com or by phone at 877-472-4607.